This week we saw another Bitcoin rally, and investors seem ready to stick around.
This is the fastest adopted technology in human history, meaning cryptocurrencies. And it was faster than the internet, faster than smartphones, faster than anything we've ever had.
So Bitcoin is a chance for energy companies to become technology companies, and it solves so many of their problems. Netflix is not going to show up in El Salvador and offer them $300 million a year in order to run a data center plugged into a volcano. Google is not going to show up in Zambia, Central Africa, and offer them $300 million a year to run a Google data center. So what you have is Bitcoin is hope for energy. It is hope for your semiconductor company. It is hope for your political jurisdiction. It solves a problem. And because it can go anywhere, right? It can go anywhere on Earth with a satellite uplink. It's probably a more compelling solution to someone that has natural resources in a poor country, even than in a wealthy country. A self-distributing, dynamically distributing Bitcoin mining network, and it is solved for the problem, where do I find the cheapest energy in a politically supportive jurisdiction? That's the problem you're solving for. That's not the same as the cheapest energy. It has to be cheap energy from an energy provider you trust in a political jurisdiction you trust. Okay, what's the answer? Well, the answer is a dynamic equilibrium, right? It's changing every single week, right? What we're trying to create with Bitcoin is a digital property network, something that will last for 1,000 years or 10,000 years. How do I create digital property in cyberspace? And we can call it money if we like, digital monetary network or digital property network. What I want is a decentralized network that will last past the average life expectancy of a human being or an institution or a nation state. The beauty of proof of work is that the network derives its integrity from the interplay of the miners and the nodes and the holders, or the wallets, if you will, but with a special emphasis on the miners. What do I define as security? Well, property needs to be optimized for integrity and durability over time. Integrity meaning the protocol can't be corrupted. Right, can't mutate. If the protocol mutates, we go from 21 million to 48 million, you get a monstrosity. So you don't want a mutation, and then I don't want it to die. If I said I want to design an immortal creature, something that'll live for 1 million years, I've got to protect the protocol, and then I've also got to feed it energy and resources continually. And I'm just going to call that, and I have to protect it from a hostile attack in the near term. So a lot of times when we think about security, we think about just avoiding an attack, but really security is you can't attack in the near term. And most importantly, if you live, but you go insane or you get a grotesque mutation, then did you really live? So how am I going to achieve my quest for immortality in a network? Right. And the beauty of proof of work, it is an open protocol that is Darwinian and competitive in a way such that it is not just self-correcting on the protocol level to ensure correct money, but it's also self-healing and it's adaptive to the environment around it. I like to call these the 7 layers of security. So what do you have? You have an energy layer, a technology layer, a political layer, a financial layer, a network layer, a spatial layer, and a temporal layer of energy. So Bitcoin mining is securing and producing something which is of enormous value on a very thin line based upon any flavor and frequency of energy. And there's really nothing like that. Why does that make the network secure? Bitcoin miners are continually looking for new energy sources, and they're negotiating for cheap energy. And when they buy it, they become a big customer. So as they become customers of energy producers everywhere in the world, the energy producers become political allies of Bitcoin. So the energy producers are all regulated entities, but they're all very credible, and they all are wired in the political fabric of every society. If you are the best customer of the utility in the city or the state or the country, then that utility has a vested interest in protecting your interest. So Bitcoin co-ops energy companies, and also Bitcoin is hope for a utility. If you're a value stock, 100-year-old utility company, you're not getting a high multiple in the stock market. There's not a lot of excitement. In fact, you're regulated, and there are limits on how much money you can make by selling your energy to consumers or to businesses. You know, if the power company in New York City just jacked the price of energy by a factor of 3, they'd get shut down by their regulators. On the other hand, if you get in the Bitcoin mining business, right, you don't have those kind of regulations on you. So Bitcoin is a chance for energy companies to become technology companies, and it solves so many of their problems. You know, there are a lot of ways you can enter into the network and you can disrupt the equilibrium. One way is, as a nation state, you can start mining off of a volcano. The other way is you can design a totally new family of ASICs. Right now, the limiting factor is the number of mining rigs you can get your hands on. That's good. That creates some predictability to it, and that keeps us from going chaotic. If you look at these 2 layers of security, right, the energy layer is co-opting energy providers all around the world, and the technology dimension is co-opting semiconductor manufacturers. And if one of them, like Bitmain, gets too much power, you know Jeff Bezos' famous line, "Your margin is my opportunity." Right? So if one company gets too much power, then, well, this is not terribly complicated engineering. Yeah. I mean, it's well understood how to design SHA-256 ASICs. There are a lot of companies like Qualcomm, Intel, when they get squeezed, they need a new market. This is a new market for them as the price goes up. And the interesting thing, of course, is if there's only one provider of SHA-256 miners, Bitmain, doesn't that create an artificial scarcity to hash rate? And if there is a scarcity to hash rate, doesn't the price go, you know, the profitability of Bitcoin miners goes up? If the profitability of Bitcoin miners goes up, then don't more people want to get in the business? And if more people want to get in the business, don't they need to buy Bitcoin mining rigs? And if they need to buy it and there's infinite money. So energy and technology are a key part of the equation, but they're not the only part of the equation, because if I want to generate hashes, I have to set up a Bitcoin mining facility. There's physical nexus. I have to do it in Iceland or El Salvador or Canada or Texas. You could probably run your stake validator on a secret machine in your basement, but you can't run a 150 megawatt facility on a secret. You need the support of the mayor, the county, the governor. You know, you could look at this as a negative. It isn't, it's a positive. What it means is that Bitcoin miners are knocking on doors everywhere in the universe, and they're looking for supportive political jurisdictions.